bankers are really the kindest and honest people around. Mm-hmm. But I think bankers themselves can easily be taken advantage of when it comes to the next thing.
Oh, easily, yeah.
Because another industry that is a lot like banking is healthcare. So banking is completely regulated.
Right.
And so regulation is great. We need to be regulated.
Yeah.
We're insured. We're dealing with money.
Mm-hmm.
That is the cornerstone of capitalism.
Right.
We can't have the money sector. We can't, we don't want to run out on banks. We don't want banks defaulting. We want them to succeed.
Right.
Banks succeed. The American public succeeds.
Right.
Trust in the financial system. So, but with regulation also does stifle innovation, which there's give and take in that area. But bankers have been scared to death by regulators over the years not to innovate. And so what is happening now in a cultural shift is you have this new emergence of fintech.
Mm-hmm.
What is fintech? Fintech is just a new made-up marketing term. That's all it is.
Mm-hmm.
Financial technology. Well, that's what banks are to begin with.
Mm-hmm.
But what we're seeing a lot now is, talks customer engagement, onboarding, customer experience, UX. All of these are terms created by marketers to sell to bankers. Mm-hmm. So now, since bankers have been scared to death to innovate, now they're dependent on hiring third parties. And what happens then that I've seen all too familiar is bankers, they're scared, thinking, well, I have to innovate. I have to now partner with third parties. And so now you never want to negotiate, from the bottom,
right?
That you need them when they're in that position. You don't want to be in that position. So what I see now is bankers are giving up too much. They're giving up too much of the percentage. They're paying too much for this. I think it's going to solve everything. It's going to, do away. It's going to create profitability instantly.
Yeah.
Their customers are going to love it.
It's going to pull them into that next phase of wherever things are going because they're not innovating, like you were saying.
Correct. And, innovation to them is hidden. It's something behind the curtain that they know nothing about. But innovation is not always just technology. One thing about community banking is, to me, community banking is, we don't have a specific charter.
Mm-hmm.
People throw out the word community bank. You
don't have a special charter.
Or their need.
Yeah.
But there is no, we have the exact same banking charter, with state chartered bank is South State, Bank United.
Mm-hmm.
So there is no designee as a community bank.
Right.
Community bank is, in essence, it's bankers use it to their.
Is it a marketing term? Or is
For the most part, it is marketing. The only time it comes into play in banking is different Community Reinvestment Act. When you designate the physical area that you're in, you need to make sure that you are providing loans to the same area in your designation, that you're not predominantly, this neighborhood is only getting loans that are applying. And that neighborhood happens to be a wealthy neighborhood.
Right.
And the neighborhood that is not wealthy, and you have percentages, individuals that live in that neighborhood that are applying for loans, and there's a correlation of you're denying loans and they're in that area. You need to serve the needs of your designated areas. But for the most part, all banks have designated areas where they have branches that they need to serve the needs of.
Yeah.
So, for the essence, community bank, it's a loose term out that, marketers use. Ultimately it is, the ownership of the bank. Do they reside in your community? That's probably the better way that I look at it. But, definitely we can drill down a lot more on the consumer fraud by getting some people here and experts and see, what they see the percentage of the friendly fraud happens. I remember an old statistics as far as, I started banking 20 years ago, bank robberies.
Mm-hmm.
Well, over the years, there's more money that banks lose from, internal, at that time, shortages from teller drawers is way larger than a bank robbery.
Yeah.
But
I saw one in the news the other day. I think I sent it to you, about a bank robbery, a physical robbery. Yeah, I don't think the guy got away with anything, but I mean, how likely is that someone comes in and they have a gun, let's say, or they say they have a gun and they say, give me all your money, right? I mean, to the teller, how likely is that they would actually get any money? I mean, I know there's cash that's there. There's cash that's because you have your drive-through. Yeah. I mean, businesses that have cash.
There's drawer limits. So, tellers are not having enough money behind there to set that person.
Yeah.
A wealth of, hey, I made one big score, I'm never coming along.
Yeah.
That's going to be pocket change. If somebody comes in, they're not thinking it through.
No.
I mean, the worst thing to do is to come into a federally insured bank.
Mm-hmm. Yeah.
I mean,
and they got cameras everywhere. I mean, it doesn't make any sense today. Maybe back in the old Wild West when there's nobody.
It doesn't.
Yeah.
No. Now, I mean, if they're sophisticated, they're just going to create white-collar crimes.
Yeah, so what's the modern-day bank robbery look like? I mean, what do you see happening right now digitally, or the white-collar kind of crime that would be the new bank robbery?
You could have people applying for loans and falsifying their financials.
Okay.
Falsifying their tax returns.
So they get the loan money
of that kind of
and then they spend it.
They could do that with no intention to repay.
Yeah.
Or maybe they had the intention to repay, but they falsified documents. Mm-hmm. That's a lot harder today than it has.
And probably more on the consumer side, personal loans.
You would have it small.
Yeah.
Easy base.
Like
maybe
$3,000-$5,000.
Yeah.
Something like that.
Yeah, I mean, there are fast, online small business loans out there that you could get that through pretty quickly.
Yeah, that's true.
So you have that. I mean, there was a considerable amount of money fraud on the PPP side. So very awesome to see that they've prosecuted people that got the money and ended up buying a Lamborghini.
Yeah,
directly afterwards. So I'm amazed that actually some of those people have already been prosecuted in that short time frame. So they jumped on that pretty quick, but there's a lot out there still. When we did the PPP loans, we made sure to take care of our customers and people that we knew in our community, because yes, we did see people that we know that they would apply and we're like, I'm sorry, we know your salaries last year were X, and how did they go up 20 times a month since then?
Yeah, it's not happening.
We're not submitting this. Customers looking to purchase $1,000 of USD to Bitcoin, and they're comfortable with that purchase price. How quickly do they have to exercise that? This may not be the correct term, but option
to buy that crypto.
Correct.
So I think I'm understanding your question correctly. If I'm not, let me know. But so the price of crypto, I mean, the markets are 24/7, 365, as you know. So at least with our platform, the prices update every 5 seconds. And so, by the time they decide that they want to buy Bitcoin or Ethereum or whatever the coin is, they're going to click on that. And then by the time they get to the confirmation screen, likely 5 seconds has gone by. So the price is likely changed. And even when they're sitting on that confirmation screen, at least on our app, they're going to be seeing that price update in real time. So it's really just a function of whenever they click confirm, that order is automatically going to be routed and that price will be honored. Now, the bank doesn't actually settle that transaction until the settlement window closes, which could be the next day, but the user will see that balance reflected in their account immediately. So I don't know if did that answer your question?
Yes, that did. So within that time, as they're looking to purchase, your software is searching through all the liquidity providers set up to give the best price.
Exactly. So, and that's how our integration works. So we take the streaming quotes from the liquidity aggregation source or directly from a liquidity provider. It's a function of whatever the bank, who the bank wants to use. And so if they're using a liquidity aggregation service, which most of them are to start, then yeah, we just take the streaming quote from that. And on the back end, that liquidity aggregation service is constantly refreshing the price quotes as well. And they're only advertising the best price that they see from whoever the liquidity provider is at every single 5-second interval, if that makes sense.
Yes. All right. To bring it all together, it looks like there's 4 total parties. You've got the FI, the bank, or the credit union, financial institution. You've got Cryptify, which is the software service routing everything. You've got liquidity provider and the custodian provider.
Yep. And the liquidity provider can be wrapped up inside of the custodian as well as the liquidity aggregation service, just to simplify the legal nature of everything. So what we typically have is a tri-party agreement with which is between the bank or the credit union and Cryptify, and then the custodian that's also providing the liquidity services.
The indicators and the transactions, they, like many crimes, but even more so with human trafficking, they tell a story. When you're looking at transactions and you see transactions occurring in different branches within the same city, other cities and states, late night ATM withdrawals, things happening near casinos and hotels late at night, purchases, large purchases at pharmacies and things like that. Even one of the common ones is late night Redbox purchases. These and excessive amount of movies being purchased from a Redbox. These survivors and victims need something to do when they're not working, and
oh, wow.
Just basic entertainment is something. So lots of fast food and large convenience store spends to stock up on just basic food to
and thinking about it,
it's a lifestyle that tells a story through the transactions.
Knowing the typical banking AML softwares, majority of them are so, just white labeled and kind of have canned programs. Some of that behavior is not indicative to a lot of Americans. So that would be hard for the average BSA analyst to, spot that this is, unless it was, one account in such a volume that fast food, had to pay for a dozen people or so. I can see after the fact of once you found something, then you see those transactions, but that's a difficult one to catch up front for an analyst to see.
Yeah. And that's why I say that, the transactions are important. They definitely provide clues and could, give you a flag for something to look into. But at the end of the day, most of the time, the transactions themselves are not going to, find it. You need more context around KYC and understanding your customer and relating those transactions to what the account is, and what the customer is. The account was open for, and what about this person. In addition to that, where we excel and what we do with banks that we're working with is we curate data sets and work with banks and financial institutions and other types of commercial organizations to scrub their customer base and transactions against data sets that we curate to look for anomalies indicative of trafficking. And then, when they find a hit, they combine that with the transaction monitoring review. And oftentimes they'll either find information on something that didn't come across their radar from any type of transaction monitoring red flag, or they find something that did come across their radar based on a transaction monitoring flag, but they had no clue it would have been potentially trafficking related. And maybe they even filed a SAR and it was on, cash, cash structuring or tax evasion or money laundering or something along those lines.
So I've noticed a shift in this year. Banks were going to adoption. They're like, oh no, now I have fear of missing out. Mm-hmm. So I missed out in the beginning. So I'm heading that direction, and we're going to look into some crypto offerings. And so they've been going to the least path of resistance by, maybe the rewards on their debit cards for the customers can go to, Bitcoin. Mm-hmm. And, so they're kind of like, hey, we're cool. We're offering that. Yeah. I look at those offerings and see that, okay, great. You're probably getting less earnings that you were getting prior because you don't know the pricing they're buying it at. And it's, done at the end of the day, and there's arbitrage involved. And so it's like, okay, great. It's almost like you're pandering to, the true crypto enthusiasts. But now, since it dropped, there's been financial institutional letters sent out by regulators that says, hey, any bank, if you have anything to do with crypto custody or this, you need to let us know. Mm-hmm. And before you get into it, you need feedback. And so where I believe that, cryptocurrencies and especially stable coins, because I don't know one stable coin, if it's stable, they've got that exact amount mm-hmm. in an account somewhere that is held. It's not being invested in other stuff, so they're looking at that and they're saying, what, it dropped and we need to protect the consumers. So then they're going to go over-regulate. Yeah. And so now banks, I see, we're not even going that least cost. We're going to stop even thinking about it. And, that can be bad too.
Well, I imagine for you in this moment, and especially since, from past conversations, that some of the space that you guys have existed in as a bank is partnering with businesses that are doing some, cryptocurrency.
I look at it as a complete opportunity. Beginning of this year and last year, banks were at a mad dash to integrate the purchase of cryptocurrency through their online banking platforms. And there was a number of companies that were setting up and being an intermediary to that. I was seeing banks that the rewards on their debit cards were going to they could redeem them in Bitcoin and that area. But, with the downgrading the price of Bitcoin earlier this year, you started seeing regulatory notices. Back April, FDIC was sending out notice that, hey, any bank that has anything to do with crypto-related activities, you got to notify us right now. So they want to know if there's any banks that had any risk in owning cryptocurrency, if any of their customers, if they were ownership of platforms that were selling cryptocurrency. So, that just kind of tells you right there. Normally they don't send out notice and say, hey, are you dealing with this product?
Sure.
So that was a little preemptive. And then from there, and then in August, the Federal Reserve, sent more supervisory insights saying, hey, here are the steps that you need to take. And you want to start engaging in this activity. A lot of it is very, very bland. They don't give you specific steps, but it follows all the other risk-based practices you do with all new products and services. And, but they want you to really, yes. Yeah. And they want you to really take your time, understand it, know who you're dealing with, know your risks. And, with this administration, they're also concerned, and everybody should be concerned as how does it impact consumers? Are they being told the volatility of the market and everything that fact? Right. But even so, companies that had raised a ton of money, CoinDesk had mentioned in an article back in middle of October that NYDIG, who was one of the preeminent ones that were, they go between banks and their online to be able to purchase Bitcoin. They had raised a ton of money the prior year. And then in October, CoinDesk had reported that they laid off a third of their workforce, over 100 employees over the previous couple of weeks. And so they even have an employee quoted in the article saying that they put all their eggs in the banking strategy, but they realized there was no way that these banks were ready. And the employee even went on to say they blew through all this money telling a story that they would bring Bitcoin to the masses. Their core strategy was blundered.
Yeah.
So it looks like, there's going to be a stall, at what time will banks, online banking truly be able to purchase Ethereum, Bitcoin? There may be a few out there, but it looks like that mass adoption for that is going to stall. But on the other hand, too, true, zealots, are they comfortable with wanting to buy through their online banking anyways? Crypto, even though it is newfangled money and everything looks out, it is still, let's break it down to simple terms. It is still the same as another currency. It's just held in a different form. Correct. You can't physically have it as paper like you can the USD.
That's right.
But it's physical form. So take that out. And, what I believe the FTX trading was doing, so people would invest in, you had investors, of course, into it. And then they were an exchange for crypto. And then they were also custodian. What I believe would happen is if like I took all the banking depositors' money and went and gambled in Vegas with it, So what I don't know is everybody that was custodian money there, were they informed that was not just sitting there and that they were using? So there's complete malfeasance. I'm sure there's going to be tons of fraud cases. He's in Bahamas. The U.S. authorities want to talk to him. I mean, I wouldn't be surprised if they picked his ass up immediately he hits the U.S. soil. Something is completely bad there. And, that is going to create ripple effects because then that's going to be anybody that is against crypto. It's going to add to their argument and then it's going to take down. Overall, this happens with every type of new technology, the .com, it goes up here and it blows down. There's bad actors in every type of industry, just flat out. So now we're seeing, more bad actors into this, industry.
Right.
So within that, I definitely see that, cryptocurrency and the technology behind it is still amazing. Does it need to be better regulated? Absolutely.
Right.
Now my fear is the pendulum is going to swing and there's going to be over-regulation to the extent where it just, doesn't need to be. But I also see it as a opportunity for banks to come in to the market and say, you know what, we're stable. We know how to do this. We can custodian.
We have a word that we use around here. We call it core strategic.
Yeah.
Basically, that means a bank that buys everything from the core. And I'll give you a wild friggin' stat, man. If you go back 6 years ago, that number was just almost 50-50. Okay. It was 48% that bought everything from the core. Today, that number is 82% that buy everything from the core. And if you kind of go back to, like I was saying, I grew up with mobile, right? I mean, there's a ton of products that are sitting on a core contract today that didn't exist when I showed up, 15 years ago. Right. And I'm not exactly an old guy, I mean, you look back going to the, 2000 or into the 90s, think about pre-online banking, 90% of the products didn't exist. And so you think about the ease of the bundle, it makes so much sense. But all of the misinformation and rhetoric from the thought leaders, everything is APIs, everything is we want access to our data and open to third parties and best of breed. And the truth is, when the rubber actually hits the road, which in my mind is a contract, that's total bullshit. That's not what we're seeing. Doesn't mean that it shouldn't be easier and that that's not the right way and the more innovative way. So disclaimer, right? I'm all for it. And I think best of breed third parties is you got to pick your battles. But I think picking the right fights and being focused in certain areas and not doing everything with the core is a good thing, right? But it doesn't mean that it's...
I'm constantly annoyed that... I mean, have you met many banks that are happy with their cores? I mean, it just exactly. So what annoys me is, bankers have contributed to this problem. So we're not happy with the average core, but yet they're too afraid to leave, and which is ridiculous. Like every bank needs to, have the willingness to leave their core at that contract, because that's the only way for the cores to get better at service, provide, be transparent on their contracts and be through there. Because, a long time ago when I became CEO of Surety, we didn't have online banking, we didn't have mobile. And as I was adding those on and added mobile with the core at the time, I get mobile and say, well, what about this option? Oh, well, that wasn't included. You showed me that during the damn demo. Or what do you mean it's not included? You alluded to the fact that it included in this bundle. How I know? Well, it's not in the contract. And so, they would pull that shit, left that core, and and again, the banks have to be not afraid to do core conversions. As a banker and operating Surety Bank, things to look for when you're being sold by or partnering with a fintech. It can be a fintech, it could be origination source for leads or anything to that effect. What I'm seeing out there are, and I'm sure you guys have all come across ones that will increase your customer accounts, grow your deposit base. So that's been a very common one over the last few years. Maybe they're doing rewards on the front end, and then you're holding the deposits. But what I'm not finding is, the average banker, when they're looking at this, they're listening to the salesperson. It's got a great front end. It looks beautiful, and it's nicer than your onboarding and everything. But, they've already got banks that have been established on their products. Do your own research, pull up those banks' call reports, look at their deposits prior to launching that product and ongoing. You can look at their margins, what they're paying interest on deposits. Look in their other fields to see if the expenses on technology increased. Did that offset their earnings? It's so easy to really see. That's the first thing I default to when anybody's trying to sell me, and I look out for, because the salespeople, they'll name drop another bank. And as soon as they name drop that bank, look at it, look at their call reports. If they're losing their ass, why would you then buy their product? That bank did it a last ditch effort to expand. Their model clearly wasn't working, so they went out on a limb to buy this. And if it's not expanding and if it's not getting better margin, increasing consumers, deposits, then don't do it. The proof is right there.
I've known of hotels that, you stay at hotels, you pay cash. Mm-mm. Now, 99% of hotels is all credit card fees.
Yeah.
So whoever has their merchant gateway, that's an easy way that a lot of them have gotten cash flow right away. They take a loan. It's usually high dollar, and it's financing companies. It's typically factoring. So they may end up paying
they know the
yield
industry,
of 15%.
They're close to the data.
But it's, each day the financing company is taking a portion of the net sales from their credit card statements. So we do that. And so the only way for, that financing company to really get hurt is if they cut off that credit card machine. Mm-hmm. They bring in another company in to accept credit cards.
Right.
Are they violating? Then they're going to be like, oh shit, now we have to file against them.
But they could
breach of contract and go through this.
Yeah, but they could. They could bring in another company.
You'd have to do a lot of extra work.
Right. But they could switch. In this situation, you're stuck.
Yeah, where else are you going to go?
So that's the problem that I see. That's the problem that I would see as a investor or business owner in a business that sells through Amazon. Period. You have to really know the in-depth figure of how this works, how you actually know. I think about it the same way as Airbnb actually. As you look at investing in real estate, there are tons of people that it's contagion. I'm going to buy this property and it's going to be solely Airbnb. Well, right now that's working. But what happens in 6 months, in 6 years, when you can't rent that property out because that whole platform got shut down due to, local regulations in your area.
Cities changed their mind.
Well, you're beholden to that platform, and now people are not going to come stay at your home. Is that going to be a permanent residence? I mean, a permanent rental. Well, now it's going to be it's a different business you're in now.
Bankers right now, there's definitely uncertainty in the economy. We have inflation and higher rates. So when I look online and I'm looking through all the banking periodicals and the groups and things, I'm seeing a lot of sales of, customer experience. You got to, really hit the customers at their locations. And, bankers, during this time, 2023, we already have the technology to meet our customers at their locations. I'm sure you've got Teams, you've got Zoom. Pick up the phone call. Reach out to your customers. There's plenty of modes of communication that you can be there without having to get it. Now, if you're extremely consumer based and you've got tens of thousands of customers in the app, having that experience and having that live chat and the auto throughout your apps, I believe those are extremely important. But for the commercial and the community bankers out there, you've already got the technology. In fact, I want you to look into all your existing vendors, and I guarantee you can eliminate half of your probably technology stack that you're either not fully utilizing or not. I've had things that we've purchased and we've had a 5-year contract that we've had to set aside and just pay out for the life of the contract because it actually took more time and effort after we established of training our employees and to push it. And maybe it was a consumer product that if it's on front of mind and they want to add on during a new account application or new account opening, it just didn't fall in the narrative. And we just said, scrap it, put it aside. It ended up being cheaper, not even selling the product and just paying the minimum monthly until it was out. So really scrap dead weight. Go through your operations, look at your vendor list, and cut the dead weight out. How do we approach these guidance? Well, in regards to BSA, you know your customer. But in addition to that, you've got to know your customer's customers. So you can go beyond and depending on their sales. So, I mean, just since crypto is out in the mainstream and, everybody's got a opinion on it. If you have a customer that their primary line of business is selling cryptocurrency, then you need to know their customers. You need to get the blockchain transactions. You need to run your own analysis. It's not just enough to know that your customer has a policy and procedure. You need to test their policies and procedures. You need to do it yourself on top of it. At intervals, grab all their information, make it a requirement that you can see into their systems and see all the transactions and that their staff are doing what they say they're doing. Because, I've seen all too many times people hide behind procedures and it's, form over function. Well, to me, it's got to make sense. So you've got to have function. It's got to overlay. Just having buzzwords and saying you're doing something, you need to prove that they're actually doing it. Do it yourself and see if you come out with the same suspicious activity to the same volume.